Hey everyone, James Dahl here with Red One Realty. Welcome back to your market update for November 11th, 2025. This week has some big headlines. Fannie Mae just dropped their minimum FICO score requirement. And President Trump is floating around the idea of a 50-year mortgage. Yep, 50 years. So today I'll break down what those changes really mean for buyers and sellers, plus how the Central Ohio market is holding up as we close out the year. Let's dive in. All right, a quick look at the big picture. Mortgage rates averaged about 6.33% last week, and the 10-year Treasury held near 4.11%. So not much movement overall. But the record long government shutdown is definitely slowing housing operations, from loan processing to verifications. Now, the two biggest headlines this week, well, number one was Trump's proposed 50-year mortgage. And number two, Fannie Mae's removal of the 620 FICO minimum score. And just to add some fuel to the fire, the ADP jobs report showed a surprise gain of 42,000 jobs. That pushed rate expectations a little higher. So overall, optimism and credit policy. But sentiment across the country still pretty gloomy. If you scroll housing threads on X or Reddit, people are frustrated. They're blaming corporate ownership, high interest rates, immigration, and they're roasting that 50-year mortgage idea as nothing more than a scam. But here in Central Ohio, the tone's a little lighter. Agents are saying it's turning more buyer-friendly. Rates are steady, inventory's up, and realistic pricing is finally back. One local agent summed it up perfectly. National feeds sound angry and stuck, while Columbus feels cautiously open for business. And I'd say that's about right. All right, let's talk some home turf. We're still technically in a seller's market, but the shift towards balance is real. Inventory is up 78% year over year. Prices are steady, and homes are taking longer to sell. Here are some quick stats from the last 4 weeks. Closings, down 5%. New listings, they're up 28%. Active inventory, we're sitting at 5824, which is up 78% year over year. Median price, 339.9, up 3%. And days on market, we're sitting at 32, which is up about 23%. We have about 2.7 months of supply of housing. So yeah, sellers still have the edge. But buyers finally have choices again. And with more competition, sellers need to price right, price tight, and present right. Now, about affordability. In Franklin County, to hit a perfect affordability score of 100, where the median income family can afford a median home price, rates would need to drop to about 5.8%. Right now, we're sitting at about 97.9. So we're close, but we're not quite there. It's improving, slowly but surely. Now let's talk about this 50-year mortgage idea. The concept is simple. Stretch your payments over 5 decades instead of 3. That will lower your monthly payment. An example, a $400,000 loan at 6.575% means a payment of about $27.88 for 30 years. But stretch that out over 50 years, the payment's only $25.72. That's about a $216 a month saved. But over the life of that loan, you pay about 50% more total interest. You build equity slower. And unless we build more homes, it could even inflate prices further. Now, this plan would need approval from the FHFA and the CFPB. And realistically, we're talking about 12 to 24 months before a rollout if it passes. So yes, it helps with monthly payments, but it's not a silver bullet. It's like treating the symptom and not the cause. The next headline, and this one's getting ready to roll this week. Starting November 16th, Fannie Mae will remove the 620 minimum FICO score for loans underwritten through their desktop underwriter system, or DU. That's a big shift. It means lenders can look beyond just the credit score. They'll now weigh things like income, debt ratios, payment history, and cash reserves. This could qualify 5 to 10% more buyers who were previously excluded, especially folks with limited credit history. Now, to be clear, this is not 2008 all over again. Back then, loans were stated income, no documentation, no real verification. Today, loans must meet ability to repay and qualified mortgage rules. Everything is data verified. So it's not looser lending, it's smarter lending. It's about modernizing how we evaluate risk so more good buyers can actually get approved. And speaking of buyers, check this out. The median age for a first time home buyer in 2025 is now 40 years old. That's up from 33 years old just 5 years ago. Why? Student debt, high rents, low savings. It's pushing people to wait longer, and it's shrinking the first time buyer pool. They now make up only 21% of all transactions, half of what we saw before the 2008 crash. Meanwhile, repeat buyers have the advantage: low locked in rates, high equity, and zero motivation to move. That's widening the gap between owners and renters, and it's changing how long people stay in their homes. The game's different now. So, where does this leave us? Well, rates are holding steady around 6.3. New loan programs are expanding access, and Central Ohio inventory is growing. For buyers, get fully approved, not just pre qualified. That's what win offers in this market. For sellers, price competitively, stay flexible, and make your presentations shine. We're moving towards balance, and that's a good thing long term. All right, that's your market update for November 11th, 2025. If this helped you understand what's really happening out there, hit like, subscribe, and drop a comment below. What do you think about the 50-year mortgage? Is it a game changer or just a gimmick? I'm James Dahl with Red One Realty, helping you stay informed and confident on your path to home ownership. See you next week.